Good morning, everyone. Welcome to today's episode of Morning Wealth. Hope you have a great Monday and a great week ahead. We start with macro. US stocks closed higher on Friday as traders look past trade jitters and weak economic data. Industrial production figures for April showed a sharp downturn with 11.2% drop. Retail sales fell a record 16.4% in April from a month earlier as non-essential stores were closed. On the bright spot, Americans' view of the economy improved in early May, even though the coronavirus continued to spread. So the index of consumer sentiment rose to 73.7 in the 3 weeks ending May 13th from 71.8 for the previous 4 weeks. This is according to the University of Michigan survey, which was released on Friday. So the S&P 500 erased initial losses on Friday and closed higher, but still posted its worst week since March 20th. Treasuries fell. The yields on the 10-year rose by about 2 basis points and the 30-year about 3 basis points, the 10-year closing at 0.64. Gold was higher. 1748 is where it closed. A lot of action on oil again. WTI was up by about 6.8% at 29.43. Brent was also up. Global oil cuts will amount to about 17.2 million barrels a day when including the restriction from OPEC plus the US and others. This is according to the OPEC chief. He is cautiously optimistic the worst is over and said that it would be premature to say whether the alliance will keep the 9.7 million barrels a day cuts past June. So WTI futures climbed to the highest level since mid of March on Friday and they posted their third weekly gain. For the US economy, Fed chair warned the recovery would stretch through the end of 2021. Assuming there is not a second wave of the coronavirus, I think you will see the economy recover steadily through the second half of this year, is what he said in an interview. For the economy to fully recover, people will have to be fully confident, and that may have to wait until the arrival of the vaccine, is the comment that he made. The House, in the meantime, approved the $3 trillion democratic economic stimulus on Friday night. Now, the Republicans in Trump have already rejected it. It would provide about $1 trillion to governments and also about $1,200 in terms of checks for Americans. Moving on to equities. This coming week, investors are trying to gauge the economic outlook. We'll get a fresh look at the retail sector. So Walmart, Home Depot and Target will report quarterly results. The investors will also pass the minutes of the most recent Federal Reserve meeting. Saudi Arabia's sovereign wealth fund is planning to borrow about $10 billion by pledging some of its stakes in the SoftBank's Vision Fund. On Friday, they disclosed stakes in Facebook, Boeing and Citigroup. Warren Buffett is getting out of Goldman Sachs. Berkshire Hathaway sold about 84% of its long-time stake in the bank in the first quarter. This is according to the 13F filing. The company also slashed its investment in JP Morgan, exited its bets on Travelers Company and Phillips 66. It boosted one banking bet though, increasing its stake in PNC Financial. Facebook bought Jiffy, a library of video clips and animated images known as GIFs, for about $400 million. Compass Group is considering raising about $2 billion in new equity in what could be UK's biggest share sale this year. Elliott Management is in talks to lead a rescue of Virgin Atlantic. Another Atlantic, General Atlantic, will invest about 66 billion rupees in a 1.3% stake in Reliance Industries' Geo platforms. JCPenney filed for bankruptcy after decades of decline and said that it would be put up for sale. Fiat Chrysler is in talks to get a state-backed credit line of about 6.3 billion euros. Earnings that we will be looking forward to would be SoftBank, Panasonic, Komatsu and Subaru is what we will be looking forward today. In terms of fixed income, retail debt offering from Italy this week. That will be a test of public support. So a 4-day auction of inflation-linked bonds will kick off on Monday, which Commerzbank predicts will raise about 15 billion euros. Bond sales from Germany, France, Spain and Belgium are also set to total about 25 billion this week. The UK will also hold 2 gilt auctions and 1 inflation-linked bond sale. The BOE is considering negative interest rates. That is as per their chief economist. He said that it's something we'll need to look at, are looking at, and with somewhat greater immediacy. How could we be not, is what he said. Now, there's also more to be done with QE on gilts and corporate bonds, he said. The pound, because of this comment, erased all gains against the G10 peers. On FX, even though Germany fell into recession, the euro was the best performing currency on Friday. Now, lockdown measures are easing across the region. Italy announced that it would allow free movement within the country from June 3rd, barring specific local restrictions. Germany is also losing quarantine restrictions for travelers arriving from EU, Shenzhen area and the UK. Japan's GDP numbers will be coming in later today. Japan is probably slipping into a deeper recession from its post-sales tax increase hangover. Consensus is for the first quarter GDP, which is due today, to shrink about 4.5% from the prior 3 months. That's on an annualized basis. That is your market update. Stay safe and healthy, everyone, and I'll speak to you tomorrow. Thank you.